Hello students, in present video I am going to explain about 7th problem from company accounts topic. I am taking this problem from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. This is the 7th problem. Raj Limited issued 2000 equity shares of 100 rupees each payable as follows. 20 rupees on application, 30 rupees on allotment, 20 rupees on first call and 30 rupees on final call. 1500 shares were applied for and allotted. All money were received with the exception of first and final calls on 50 shares. These shares were forfeited and reissued at a later date at the rate of 70 rupees per share. Give journal entries to record the above transactions and prepare balance sheet of the company. This is the question. Let us see the solution for this. Let us understand the question first. There is one limited company, public limited company. Company's name is Raj Limited. Their authorized capital is not given in the question. Issued capital, company issued 2000 shares at the rate of 100 rupees each. So issued capital is 2000 into 100, 2 lakh rupees. Here 100 rupees is known as face value of share. Subscribed capital, public applied for 1500 shares. Therefore, subscribed capital is 1500 into 100 rupees per share, 1,50,000 rupees. So demand is for 1500 shares, but supply is for 2000 shares. Demand is less than the supply. This is called under subscription. And company allotted shares to all applicants because under subscription is there. And how company wants to call this amount? 100 rupees on installment basis. 4 installments. With application money, shareholder has to pay 20 rupees per share. Allotment money is 30 rupees per share. First call amount 20, final call amount 30. Total 100 rupees. In present year only company called all the amounts. Therefore called up capital is also 1500 shares at the rate of 100 rupees each, 1,50,000. On 50 shares, only application money, allotment money came. Assume these 50 shares are purchased by one shareholder known as Ravi. Company forfeited Ravi's shares. Forfeit means taking away of property on breach of a condition. Ravi is not paying first and final call amounts now. Company cancelled his allotment. In company's register of members, company removed his name. Now he is not company shareholder. He loses all his rights in shares. He is not entitled for future dividends. Already he paid application money and allotment money on 50 shares at the rate of 20 rupees each. He paid application money 1000 rupees. On 50 shares at the rate of 30 rupees each, he paid allotment money 1500 rupees. He paid 2500. Now company is not going to refund this amount to Ravi. So this amount is capital gain to the company. And this amount is transferred to a separate account known as share forfeited account. And these 50 shares are reissued by the company. In books we are writing that one share face value is 100 rupees. But issue price is only 70 rupees. So in reissue of share there is a loss of 30 rupees. 100 minus 70. So this 30 is nothing but discount on reissue of shares. So reissue can be made at a par, at a discount or at a premium. In present problem, reissue is made at a discount. Remember, reissue means not a new allotment. Reissue means nothing but selling the forfeited shares. Generally, company reissues the shares on auction basis. How much is the discount loss? 50 shares on one share. Discount is 30 rupees now. 100 minus 70 rupee. Then discount amount is 1500 rupees. This loss company will adjust from this forfeited account credit balance. On forfeited shares, company received 2500 rupees now. That amount company is not refunding. So that is capital gain to company. That capital gain amount will be utilized to adjust this discount loss. 2500 credit balance in share forfeited account minus discount loss 1500. Then the remaining credit balance in share forfeited account is 1000 rupees. Now finally that 1000 rupees company will transfer to capital reserve account. Finally, how much is the paid up capital amount? In previous problems, when there are some calls in arrears, from called up capital we used to subtract that calls in arrears. Then paid up capital used to come. But in present problem, even though calls in arrear is there, we should not subtract that from called up capital to find out paid up capital. Because these shares, 50 shares, are reissued. So in books we are writing that again at 100 rupees we are issuing them. So finally there is no calls in arrear because this 2500 loss company has adjusted. How? At the time of reissue, from shareholders 3500 is coming, and the discount loss is also we have adjusted from share forfeited account. Finally, there is no calls in arrears. Therefore, paid up capital is also same. 1500 shares at the rate of 100 rupees each, 1,50,000. And finally, what is asking in the question? He is asking us to write journal entries for these transactions, and he is also asking us to show the balance sheet. First, let us see journal entries. First entry is for receiving application money. Public applied for 1500 shares now. At the rate of 20 rupees each from applicants, 30,000 is coming to company. Our assumption is company deposited that money in bank account. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. Bank is a receiver. Therefore, in first entry, bank account should be debited. Bank account debtor. 30,000 is coming now. Therefore, 30,000. 2. Applicants are giving this money to the company. In future, company should return this money to applicants. To the company, applicants are creditors. Creditor is a liability. Liability shows a credit balance. Therefore, applicants' accounts we have to credit. Instead of writing their names, we write share application account. Amount 30,000 rupees. Journal, serial number, particulars, debit, credit. First entry is bank account data to share application account. Narration, for what we are writing this entry, on 1500 shares at the rate of 20 rupees per share application money came. Mention that as a narration. Being application money on 1500 shares at 20 rupees per share received. Amount 30,000, 30,000. Second entry is for transferring application money to share capital. Finally, all these installments amounts we should transfer to share capital only. And share capital is also a liability because from applicants we are receiving that amount. In future, company should return to them. Liability shows a credit balance. Therefore, share capital account should be credited. Share application account we are transferring to share capital. After that transfer, share application account will get closed. No? So in first entry, we wrote that they are creditors. Now they are not creditors because we are transferring that to capital. So to cancel this share application account, we have to debit this account. So share application account data. We have created share application account with 30,000. Therefore, we have to cancel with the same amount. So amount is 30,000 rupees. Second entry, share application account data to share capital account. Entry is for transferring application money to capital account. No? Mention that as a narration. Being share application money on 1500 shares at 20 rupees per share is transferred to share capital account. Application related entries are completed. Next, allotment related entries. First transfer entry we should write, then money received entry. Allotment money on one share 30 rupees should come. So on 1500 shares, 1500 into 30, 45,000 rupees should come. From applicants, that money should come to us. So for 45,000, applicants are debtors. Debtor is an asset. Asset shows a debit balance. Instead of debiting all applicants' names, we debit share allotment account. Share allotment account debtor, amount 45,000. To capital account we want to transfer now. Therefore, credit share capital account. Amount same. Third entry, share allotment account to share capital account. On 1500 shares at the rate of 30 rupees each, allotment money should come. That amount we are transferring to share capital. Mention that as a narration. Being share allotment money on 1500 shares at 30 rupees per share is transferred to share capital account. Receiving allotment money. From applicants 45,000 rupees came. That money company deposited in bank. Bank is a receiver. As per personal account rule, bank account should be debited. 45,000 rupees coming now. Debit that amount. 2. In third entry, we wrote that applicants are debtors. Now they are not debtors because already they paid money. This debtor account we have to cancel. By debiting, we have created a debtor account. To cancel, we have to credit. Therefore, credit share allotment account. Amount same 45,000 rupees. Fourth entry, bank account add to share allotment account. Narration, on 1500 shares at the rate of 30 rupees each, 45,000 rupees came now, mention that. Being allotment money on 1500 shares at 30 rupees per share received. Allotment related entries are completed. Now come to first call related entries. First transfer entry, then money received entry. From applicants on 1500 shares at the rate of 30 rupees each, 30,000 first call money should come. So for 30,000, applicants are debtors. Debtor is an asset. Asset shows a debit balance. Instead of debiting applicants' names, we debit share first call account. Share first call account debtor. From applicants 30,000 rupees should come now. Write down that amount. 2. This amount we want to transfer to share capital. Therefore, credit share capital account. Amount same 30,000 rupees. Fifth entry, share first call account to share capital account. On 1500 shares at the rate of 20 rupees each, first call money we are transferring to capital account now. Mention that as a narration. Being share first call money on 1500 shares at 20 rupees per share is transferred to share capital account. 1500 shares into 20 rupees each, 30,000 is the amount. Next entry is for receiving first call money. On 50 shares, company failed to receive first call money. Finally, on 1450 shares at the rate of 20 rupees per share, 29,000 came. So for 29,000, bank is a receiver. As per personal account rule, debit bank account with 29,000 rupees. Bank account debtor 29,000. 2. From applicants money came now. Now applicants are not debtors. Therefore, this first share first call account we have to cancel. By debiting we have created. To cancel we have to credit. To share first call account. We have debited share first call account with 30,000. But we are crediting share first call account with 29,000 only. Means share first call account is not completely cancelled. Still 1,000 rupee debit balance is there. Sixth entry is bank account data to share first call account. Narration, in 1500 on 50 shares first call money not came. So on remaining shares 1450 shares at the rate of 20 rupees each first call money came. Mention that. Being first call money on 1450 shares at 20 rupees per share received. Amount 29,000 rupees. First call related entries are completed. Now finally come to final call related entries. First transfer entry, then money received entry. Transfer entry. On 1500 shares at the rate of 30 rupees each, 45,000 rupees should come from applicants. For 45,000 they are debtors. Debtor is an asset, we should debit. Instead of applicants' names, share final call account we will debit. Share final call account debtor. From applicants 45,000 rupees should come. 2. To share capital we are transferring now. Therefore, credit share capital account. Amount same 45,000 rupees. Seventh entry, share final call account to share capital account. On 1500 shares at the rate of 30 rupees each, final call money we are transferring to share capital. Mention that as a narration. Being share final call money on 1500 shares at 30 rupees per share is transferred to share capital account. Amount 1500 into 30, 45,000 rupees. Eighth entry is for receiving final call money. On 50 shares at the rate of 30 rupees each, company failed to collect 1500 rupees. Then how much money came finally? 1450 shares into 30 rupees each, 43,500. That amount only we deposited in bank now. Therefore, debit bank account with 43,500 rupees. Bank account debtor 43,500. 2. In seventh entry, we wrote that applicants are debtors for 45,000 rupees. Therefore, share final call account is debited. Now 43,500 they paid. For 43,500, they are not debtors. We have to cancel. By debiting, we have created share final call account. To cancel, we have to credit that. To share final call account, 43,500. Observe one point. Seventh entry, we have debited share final call account with 45,000. But in eighth entry, we have credited share final call account with 43,500 only. In share final call account also, there is a debit balance of 1,500 rupees. So in share first call account, there is a debit balance of 1,000 rupees. In share final call account, there is a debit balance of 1,500 rupees. Eighth entry, bank account data to share final call account. Narration, on 50 shares final call money not came. On remaining shares 1450 at the rate of 30 rupees each, final call money came now. For that we are writing this entry. Mention that as a narration. Being final call money on 1450 shares at a 30 rupee per share received. Now come to the new point of this problem. 3 final call. In previous problems also we learned. New point is on 50 shares, first call money, final call money not came. Company forfeited these shares. Now for that forfeiture, we have to write the entry. That is 9th entry. Observe the previous entries. In second entry, we credited capital account with 30,000 rupees. In third entry, we credited capital account with 45,000 rupees. In fifth entry, we credited capital account with 30,000 rupees. In seventh entry, we created capital account with 45,000 rupees. Finally, we have created capital account with 1,50,000 rupees on 1,500 shares. Now 50 shares are cancelled now. Therefore, 50 shares related capital we should cancel. By crediting, we have created share capital account. To cancel, we have to debit. Therefore, debit share capital account. Share capital account data with how much amount? 50 shares we are cancelling. One share face value is 100 rupees now. Into 100, 5,000 rupees. 2. On forfeited shares, company received application money, allotment money, no? So amount received on forfeited shares, how much? 50 shares into at the rate of 20 rupees each, 1,000 application money came. 50 shares into at the rate of 30 rupees each, 1,500 allotment money came. Total 2,500. After forfeiture, company is not going to refund this money to those shareholders. So this is capital gain to the company. This gain we have to show in an account known as share forfeited account. So share forfeited account is a nominal account because we are going to show capital gain in that. Expenses, losses, incomes, gains are nominal accounts now. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Share forfeiture amount is a gain. Therefore, we have to credit share forfeited account. To share forfeited account. Amount 2,500 rupees. Next, in first call, there is a debit balance of 1,000 rupees now. In fifth entry, we have debited first call account with 30,000. But in sixth entry, we have created first call account with 29,000 only. There is a debit balance of 1,000. In books, we are writing that from applicants, we have to receive that 1,000. Applicants are debtors for 1,000. Now these shares are forfeited now. That 1,000 is not going to come from applicants. Now they are not debtors. Means we have to cancel. This debit balance in share first call account, 1,000 rupee. By crediting, we have to cancel. Therefore, to share first call account, amount 1,000 rupees. Next, come to final call related entries. 7th entry, 8th entry. In 7th entry, we debited final call account with 45,000. In 8th entry, we have credited it with 43,500. So in share final call account also 1,500 debit balance is there. Means in books we are writing that from applicants 1,500 rupees should come. For 1,500 applicants are debtors. Now they are not debtors because their shares are cancelled. That 1,500 is not going to come from them. Therefore, this debit account now we have to cancel. To share final call account, amount 1,500 rupees. So remember, while writing forfeiture entry, which points you have to remember? Share capital should be debited. The amount which we received on forfeited shares, we should credit to share forfeited account. And The amounts which are not going to come from them, these amounts we have to credit. Ninth entry, share capital account debtor. 50 shares at the rate of 100 rupees each, 5,000. 2 share forfeited account, received amount. On application, at the rate of 20 rupees, on 50 shares we received amount. Allotment at the rate of 30 rupees, on 50 shares we received amount. Totally we received 2,500 rupees. That amount we are transferring to share forfeited account. 2 share first call account. On 50 shares at the rate of 20 rupees each, first call money not came. That amount 1,000 we have to credit. 2 share final call account. On 50 shares at the rate of 30 rupees each, 1,500 not came. That amount we should show for this. Narration, being the forfeiture of 50 shares of 100 rupees each fully called up for non-payment of first call at the rate of 20 rupees each and a final call at the rate of 30 rupees each. Next entry is for reissue of forfeited shares. These forfeited shares 50 are reissued to new applicants. In books, company wrote that 50 shares are sold at the rate of 100 rupees only. But issue price is not 100. At 70, we sold it to new applicants. Don't think that reissue is a fresh allotment. Already shares are allotted. First time 1500 shares are allotted to the public. Now reissue is considered as only a sale. And generally, company sells forfeited shares on auction basis. In books, we are writing that 50 shares are sold at the rate of 100 rupees each. Actually speaking, at the time of reissue, on one share only 70 is coming. But in books, we are writing that 100 rupee came. Total face value came. So previously, in ninth entry, we have cancelled capital account with the 5,000 rupees now because 50 shares are forfeited. Now these 50 shares are reissued. Therefore, again capital increases with the 5,000. So capital shows a credit balance because it is a liability. Now again we have to create share capital with the 5,000 now. Therefore, credit share capital account with the 5,000 rupees. To share capital account 5,000. From applicants 3,500 rupees coming. So bank is a receiver for 3,500. Therefore, debit bank account with 3,500. Bank account debtor 3,500. So how much amount is not going to come? 5,000 minus 3,500, 1,500 rupees. This is loss. This loss we have to adjust from credit balance of forfeiture account. Observe ninth entry. Share forfeited account is credited with 2,500. There is a credit balance of 2,500 in share forfeited account. This is capital gain. That money we should utilize to adjust this 1,500 rupees loss. Therefore, for 1,500 rupees, we have to debit share forfeited account. 10th entry, bank account debtor, share forfeited account debtor to share capital account. Bank account. 50 shares are reissued at 70 rupees each. 50 into 70, 3,500 rupees. Share capital. 50 shares at the rate of 100 rupees each. 5,000 rupees. Now the difference we should debit to share forfeited account. The difference is loss, no discount. 100 rupee minus 70, 30 rupee. On one share discount is 30 rupee. On 50 shares 30 into 50, 1,500 rupee. That loss we should debit to share forfeited account. Mention that as a narration. Being 50 shares are reissued at 100 rupee paid up for 70 rupee per share and the discount loss 50 shares into 30 rupees is equal to 1,500 rupees is adjusted from share forfeited account. Last entry, 11th entry is for transferring the final credit balance in share forfeited account to capital reserve account. Observe, in 9th entry, share forfeited account is credited with 2,500. In 10th entry, share forfeited account is debited with 1,500. Now there is a credit balance in share forfeited account, 1,000 rupees. That balance we should transfer to capital reserve. First of all, by using a formula in a tabular form, we have to calculate this credit balance. Let us see how to calculate the credit balance in share forfeited account. See, this is the table. Calculation of profit on reissue to be transferred to capital reserve. Particulars amount. Amount forfeited on shares reissued. this amount we have to calculate by using this formula. Formula is total amount forfeited divided by number of shares forfeited into number of shares reissued. Total amount forfeited. On forfeited shares, already we received 2500 rupees now. That amount divided by number of shares forfeited. 50 shares are forfeited into number of shares reissued. 50 shares are reissued. 50 will get cancelled. 2500 in outer column. Minus reissue discount. 50 shares are reissued at the rate of 70 rupees each. So 100 minus 70, 30 rupee is the discount on one share. On 50 shares, 50 into 30, 1500. Then 2500 minus 1500. Finally, the credit balance in forfeited account is 1000. That 1000 is what? Profit on reissue to be transferred to capital reserve. Take a screenshot of this table. How to write the journal entry for this transfer? See, credit balance of share forfeited 1000 we want to cancel. Therefore, we have to debit share forfeited account with 1000 rupees. Share forfeited account data 1000 rupees. We are transferring this balance to capital reserve now. Therefore, credit capital reserve account to capital reserve account. Amount same 1000 rupees. 11th entry, share forfeited account data to capital reserve account. Finally, the credit balance in share forfeited account 2500 minus 1500, 1000. We are transferring to capital reserve now. Mention that as a narration. Being the credit balance in share forfeited account is transferred to capital reserve account. Take a screenshot of journal. Next page. Journal entries are completed. Now come to balance sheet. This is the balance sheet. Heading, balance sheet of Raj Limited asset dash. Liabilities amount, assets amount. Liability side, under the head share capital, we have to show different categories of share capital. First one, authorized capital. In question it is not given, nil. Issued capital, 2000 shares at the rate of 100 rupees each. 2 lakh is the issue capital amount. Subscribed capital, public applied for 1500 shares now. So subscribed capital is 1500 shares at the rate of 100 rupees each, 1,50,000. Called up comma paid up capital. Called up capital, total 100 rupees called in current year only. Therefore, called up capital is 1500 shares at the rate of 100 rupees each, 1,50,000. Paid up capital, even though calls in arrear is there on 50 shares, these 50 shares are reissued and the face value of reissued shares 100 rupees means finally there is no calls in arrear. Therefore, paid up capital is also same, 1500 shares at the rate of 100 rupees each. Next, in capital reserve account, forfeited account of credit balance 1000 we have transferred now. Now 1000 capital reserve balance appears in balance sheet under reserves and surplus on liability side. While calculating liabilities total, authorized capital, issued capital, subscribed capital amounts we should not consider. That is why we drew lines for them. Paid up capital amount we should consider. So paid up capital 1,50,000 plus capital reserve amount 1000, total 1,51,000. Asset side also same. If you post all the journal entries in bank account, then same balance comes. Therefore, asset side cash at bank amount is 1,51,000. Two side totals same. Take a screenshot of balance sheet. This is the end of present video. Hope this video is helpful to you. Thank you.